heavy lifting for the Canadian economy over the last decade. But now, in the uncertainty surrounding COVID-19, some wondering if what had been a big part of the economy will become a liability. We talk a lot about household indebtedness in this country. Bloomberg did a deep dive on what's happening under the hood with Canadian housing. We've got it at bnmbloomberg.ca, and we're also joined now by the reporter behind that story, Natalie Obiko-Pearson, joining us. And Natalie, the headline on your story, once safer than gold, Canadian real estate meets its match. Just give us a sense on some of the things you've learned about Canada's housing market in the face of this pandemic.
That's right, John. So if you remember back in 2015, the chairman of BlackRock described Vancouver condos as a better store of wealth than gold. So we're really seeing the coronavirus putting that theory to the test today. And, you know, the outlook for Canada is more precarious than most. We've seen property markets in the UK, Australia, Hong Kong, all being roiled by job losses and uncertainty. But there are two reasons why Canada is in a particularly vulnerable position. And one is just the size of the real estate sector in this economy. I mean, people have this perception, especially outside of Canada, that it's an oil-driven economy. But in terms of contribution to GDP, real estate and residential building construction contributed 15% last year. That was a lot more than energy, which was only 9%. And of course, the other thing is household debt, the highest amongst G7 nations. I mean, some of the figures, when you kind of step back and take a look at it, are really quite striking. Across the nation, on average, Canadians owe $1.76 for every dollar of income that they earn. But drill down a little bit deeper even into, say, Toronto and Vancouver, and it gets even more alarming. In Vancouver, on average, households owe about $2.30 for every dollar that they earn. That is on par with Iceland's household debt ratio before the global financial crisis.
Wow, those are startling numbers. And I've said this before, Natalie, but it bears repeating since we're looking at today's environment. We often compare today to the financial crisis about a decade ago. You know, before things fell apart in the U.S. housing market, we often talked about Canadians being fairly conservative with the debt they take on, especially versus some in the United States where there was this home ownership dream that was very much alive and well. But after a decade where Canada's economy initially had navigated relatively well through that financial crisis, and then we saw that situation with interest rates going down, you've really seen that debt load surge over the last 10 years. And as you point out in your story, I mean, you could go back to the 90s really to talk about the sort of the asset valuation growth that we've been watching unfold here.
Mm-hmm. Yeah, and that's right. I mean, I think you have to ask the question. I mean, yes, we sailed through the Great Recession with barely a blip, but what pulled us out of that? What kept Canada from becoming, from having a meltdown like the U.S. saw? And yes, to some degree, the banks were more conservative up here, but the main reason was really consumer spending. I mean, Canadians have been on a 2-decade spending spree since this downward shift in mortgage rates began in 1990s. You know, Toronto and Vancouver haven't had a major correction during that time. And housing has really become this great sort of Canadian wealth conjuring machine. You know, the people felt richer as their home prices went higher. They spent more, they borrowed more, they sent prices even higher. And so all of that, you know, I spoke to one bankruptcy trustee and he's saying, you know, this is the great reckoning. And this time, the difference is we can't depend on that unflappable consumer to pull us through. So what are we looking at when we come out on the other side of this? When households are mired in debt, it makes recessions deeper and it takes longer to get out. And we just don't have anything really to pick up the slack. Certainly not the consumer, certainly not oil.
All right. Well, it's a fascinating read, and we appreciate you shedding some light on it, Natalie. Thanks a lot. That's Natalie Obiko-Pearson, who wrote that story, which you can see on our website, bnmbloomberg.ca.